The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 25th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. Hey, wrong show. How about welcome to the Money Masters show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. So much for multitasking, huh? My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs out here. You know, there's 7 great laws of life. You know, we've all heard of the 7 wonders of the world, those being the Great Pyramid of Giza, the Hanging Gardens of Babylon, the Temple of Artemis, the Statue of Zeus at Olympia, the Mausoleum of Mausolus, the Lighthouse of Alexandria, and, of course, my favorite, the Colossus of Rhodes out here. There are also what I believe to be the 7 great laws of life. And those 7 laws are, number 1, the more one works and plants, the more one can harvest. The more one good can do, the more success one can achieve. Much in life, number 3, much in life depends upon our view, and only we can control our view. Number 4, one stone overturned can become a stepping stone to the next discovery. Think about that one, folks. Number 5, whatever we choose to focus on, good or bad, our mind can, and guess what? It will expand. Number 6, things will happen around you. Things will happen to you, but the things that really matter are the things that happen within you. And finally, number 7 is choose to do what you can, where you are, and with what you have. Always be present, folks, and thank you so much for being present with us here today. Let's go check out these markets out here right now. We've got the Dow trading off about 37 points. It is out trading at 16,171. The S&P down about 5, trading at 1842. We've got the NASDAQ Composite off 11 points, trading at 4281. Russell 2000 off 2.5 points, traded at 1172. Tesla Motors leading the charge to the upside, up $30 and change. Zully Inc. Zul Illy. Looks like Zully to me. ZU is a ticker symbol. That's up 41%. That's trading up $18. Intermune, that's up $16. That was up 30 some odd dollars or what have you. Boy, that's way off of its session high out there. Intermune, ITMN. You've got Priceline up $11. LinkedIn up 4. Sierra Pharmaceuticals, that's up 5%, up $3.93. Dillard's, which was struggling yesterday, looks like a little counter trend bounce out here, up $3.47 out here. To the downside, Regeneron Pharmaceuticals kicking in here. That's trading down $8 right now, up 2 3/10%. Chart Industries, GTLS is its ticker symbol. That's trading off 7%. Cena Corp down 8%. Real Page RP, that's trading down 22%. Pharmacyclics, PCYC, that's off about 3%. Rosetta Stone, or Rosetta Resources really, is the actual company name. That's trading down about 7.5%. Our call-in number 877-927-6648. Let's take a look at what price is doing here. It's trading up. If we take a look at, let's come back. Take a look at the ES Mini. We're just simply picking up from the last hour out here. If we take a look at what price has done or what price has not done as we speak here just yet, it has not broken the rising price channel. Very close to trying to break it. Certainly it has pierced it, but the body of the candle is truly the essence of price out here. That level has not been broken. If that can't break it down out here, and what we have seen is really price come back to the breakout of yesterday. So in essence, the breakout of yesterday was at 1837. Nice wide-ranging bar. Good volume there, 261,000 contracts. As price came back here at 10 o'clock was 219,000. Going against 261 and coming into that rising price channel. Looks like the bulls are out in full force defending their position out here inside of the market. me a moment here just to let me see something here. Sorry about that, folks. I just need to make one quick change here. Just want to adjust a stop inside one of my trades. Hate to do that live, but no other choice in the matter. There we go. All adjusted. Okay. So all hands on deck out here. Now let's go take a look at what the NASDAQ futures are doing out here. Let's take a look at the King, the real strength in the marketplace. We can see price moving down into also the rising price channel as well as the breakout. Nice wide-ranging bar. 40,000 contracts at 10 o'clock yesterday. On the way up, on the way down here, only 32,000 contracts, so not enough to bust them down out here. Looks like this rising price channel will hold, at least was going to hold here right now, as it does not have enough volume to the downside to push through that level, both the breakout as well as the rising price channel. If we take a look at the Dow being the weakest link out here inside of the futures marketplace, inside the indexes out here, not even making it all the way down to the bottom of its breakout session from 10 o'clock yesterday. That would have been a price of 16,105. What it did do, though, so was able to get down to the bottom of the rising price channel, was coming back with 21,000 contracts versus 25,000 on the upside. So we can see, even from a volume perspective, light volume on the way down. So the lows have been rejected. They've been at least rejected here for the moment. And that is just a follow-up to the 30-minute charts that we were looking at inside of the futures contracts out here. If we take a look at the Euro Japanese yen, is, well, not totally really tipping its hat. It is moving into the oversold condition here. So just not enough here for me to tell you, because it's really boils down to the daily chart here. If we take a look at it, the daily chart is just traveling in a sideways consolidation mode out here, and that is in the Euro Japanese yen. Let's go take a look at the, speaking of currencies, as long as we're in the currency market, let's go take a look at the currency pairs. Let's start off by taking a look at the Queen Bee, the Queen Mum out here. You can see it has broken through the descent. This is a weekly chart. So last week we did see price move above that descending price channel. We haven't seen it close above that level. Well, this descending price channel takes you back to 2008. So we have not seen a close above that level ever since that time period. Now, it was not exactly a huge close above it, but nonetheless, we did see a close above that level here last week. Now, the next area of resistance becomes this little coordinate of the trend line. That's the black diagonal line on my screen, as well as horizontal resistance set up by that bearish engulfing candle that took place the week of November the 1st. That says that your next area of resistance inside of the euro U.S. dollars, 138.31 out there. That's what's going on in the euro. Let's go take a look at what pops up on the screen here first. U.S. dollar, Japanese yen. U.S. dollar, Japanese yen really just simply been traveling sideways out here. Been traveling sideways, have to say, since about February 6th. So for February 6th, today's the 25th, so a good number of days just simply in traveling sideways, not giving me on a daily chart any real great indication. It does have a nice little potential sell pattern at about the 103.66 level. Of course, that is on a daily chart for the U.S. dollar, Japanese yen. Let's go take a look at that Great British Pound. Let's go see what it is doing. Great British Pound, of course, having broken out of a consolidation pattern, a big one. This is the daily chart, though, that we're looking at first. The daily chart had formed a butterfly pattern, 3 drive-ish to a top pattern, a 5-point wave reversal, the whole kit and caboodle, as was making a high here on February 17th up at that 168.21. That says that could be some resistance out here. What it did do, let me get rid of the A to B equals CD pattern out here so we can pay attention to that. What it has done thus far is we go from the swing point low from February 5th, 162.51, all the way up to the swing point high. That's the one that came in on February 17th, that number one again, 168.21. So if we go from the low to the high, what we'll see here is so far we've seen price make that dead cat bounce, normal bounce, pulling back to the 0.382 level, which is 166 and just a tad of change out there. Question is this going to make a small A to B equals CD down, or is that the extent of the move out there? Why do I say the extent of the move? Well, because on the weekly chart, this thing is finally broken out above long-term resistance out here. So the real test on any pullback, and where that rising price channel on the daily chart as we flip back and forth here, where that rising price channel where an A to B equals CD looks like it could set up, would take you all the way back down to the, let's go ahead and draw that pattern back in here, even if it's today, around the 164.85-ish type level. And we'll see if we go over to the weekly chart out here, 164.7 is probably the actual support line. So now that we've seen a break here of the Great British Pound, again, just like the consolidation patterns that we were looking at inside of the daily futures contracts out here, this will be a big one. Coming back and testing it and holding it. Now you can see here for this a weekly chart that we're looking at for a series of a month and a half at least, we saw really since the time frame, first time up was December 13th. So a couple of months here of testing before it finally broke through. That, again, is the Great British Pound U.S. dollar. It's got a bit of resistance at the 170-ish level, but once it clears that, the consolidation pattern ought to unfold, and you ought to see a Great British Pound at about $1.80. So if you are traveling over to England, maybe you want to start considering maybe converting some of your dollars now out there and get some pounds as we speak here now. Otherwise, it's going to be more expensive for your travels overseas. So that takes care of the currency pairs. Well, it doesn't take care of all of them. Let's go ahead and consolidate all those and put them into the basket, which is called the U.S. dollar index. If we take a look at the U.S. dollar index, what is it doing here? You got a little bullish engulfing candle. This formed here back on the trading session of February 19th. Says you ought to find some support at the 79.95 level. You're trading inside that swing point. That had 17,000 contracts down at that swing point low. So far today, you've done about 5,700 contracts. That is inside the U.S. dollar index. I do have a little bit of a delay here, about a 10-minute delay inside of that chart pattern out here. Let's take a look at the over at some commodities here. Let's go back, take a look at Goldilocks. Gold just simply now using that 50-day exponential moving average as maybe a little bit of a trampoline. That used to be resistance. Now we're going to find out if that becomes support. Gold trade out at $13.38. Doing it on some nice rising relative strength out here. That relative strength indicator 14 period is at the 73.87 level. Its most recent high, that took place at 73.55. That was on February 18th. That is a strong sign. It says 13.62. Looks like it's going to be the next target here for Goldilocks. If we take a look at silver, a little bit of a different story here this morning. That 50-day still continuing to act as resistance, but nonetheless just simply consolidation up at its highs. That is bullish out here for silver. Says 22.67. Could be the next move for the shiny metal out there. If we take a look at the black metal, we're taking a look here at light sweet crude. Price coming down, testing the rising price channel. So far, the body of that candle is holding as a support level here. So not a breakdown, not just yet. Inside of black gold, Texas tea. 877-927-6648. The Bulls are back out. Dow is off only 4 points. S&P down 2. Be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome, Boke. How about that? Welcome back, folks. Thanks so much for joining us this morning. I did want to say thank you to each of you that have downloaded my special report calling major market tops and bottoms out there, showing you the patterns associated with those. If you haven't had a chance to do that, and I can see just the last four folks out here just in the last hour or so that have downloaded the report. I really want you to have this in your possession out here. I teach you about the pattern. So please go over to the homepage of TFNN.com. In the left-hand side, you'll see a little up arrow, down arrow key. Just make sure you push the up arrow. You will see that special report. It only takes you just minutes to download it. It's one of these reports you want to have as kind of an archive thing in your papers, in your set of tools out there. You want to use this as a set of tools to helping to identify what is going on inside of the marketplace. So thanks to all that have already signed up and received that free special report. As we come back to these markets out here right now, let's take a look around, and let's go take a look at the indexes. Let's go see what we've got going on there. So we haven't done that. Let's do that. We'll take a look at the ETF structures. We'll take a look at some volumes, kind of get a feel for what is going on here. Now, we want to start off with, let's start off by taking a look at the New York Stock Exchange. New York Stock Exchange, what did it do yesterday? I went ahead and pierced the October 2007 high. That number is what, 10,387? I should have it measured. There we go, 10,387.17. Closed below it, so you rejected price. You moved up there. You also tested the high from December 31st, which was at 10,406 and change. Yesterday got up to 10,426.94. So very nice. We had nice market strength, market breadth is what I should say, occurring yesterday. All points moving forward. Now, the key level here is going to be that 10,387. Yesterday I used the 10,406. Was it 10-406? Let me see here. 10-406.77. Let's look at this at the New York Stock Exchange really on the weekly chart. So what you want to see here, if you're bullish or bearish, you really need to be paying attention to the NYSE chart. So a close above 10-387.17 this week, and then a pullback to test it and reject it would be exactly what we saw inside the consolidation patterns, inside of the Dow, inside of the S&P, inside of the Russell 2000. So that would be the bullish case. Bearish case would be to just simply get above that level, come back inside the consolidation. That always sets up a potential move to the consolidation lows out there. So what are we doing here today? Not a whole lot. A inside day, so it's not providing you with any kind of information out here. New York Stock Exchange is down 18 points. It's got about 250 net declining issues. In order for the bears to take control, and I do mean take control here and have an opportunity to do something with the market, you would need to see, I'll get the number for you. Just bear with me for a moment. I have to open up a new spreadsheet. You would need to see 2,210 net declining issues or more. If you do see that today, then you can chalk one up for the bears, and you would also have the VIX index above the 50-day exponential moving average would be my suspicion out there. Speaking of that 50-day exponential moving average, it's right around the 1487 is the number, 1487-ish. Okay, so we'll call it 1490. Right now trading at 1445 as we speak. Now let's go take a look at the other indexes. Let's start off by taking a look at the S&P 500, see what it is doing, what it has done out here. Right now trade out at 1845.16. It is down about 2 points from yesterday's close. Should be, what do I have? I got a problem out here with this chart because that does not look right. Give me a moment here. Refresh it. That's a bummer. Let me go to a different, looks like I got something that is corrupted in here. Of course, my system completely shut down last night, which was not a good thing when I woke up this morning. Let me see if this chart here for the S&P is any better, because that one was not correct. So here's our full moon chart out here. There, this looks a little bit better. So what do we have inside the S&P here right now today? Nothing. An inside bar, so not really releasing any kind of information. Nothing bearish about this candle signal as we speak here right now. What did the S&P 500 do? It went ahead and took out its highs out here from January 15th, so it got to a higher high. No bearish reversal signal candle-wise or anything from yesterday. What does it say about the S&P 500? It says that it can move to higher ground. That higher ground could potentially be an expansion of its most recent set of swing points out there. If that's the case, that's a doozy to the upside. That would take you inside the S&P 500. That would take you up to about 1881. Right now you're trading at 1843, but it's going to first have to get above the highs out here from yesterday on February 24th. We get back. Let's go take a look at the ETFs. Let's go take a look at the index ETFs. We'll take a look at some volume. Maybe we'll even take a look at the spiders inside the S&P 500 sectors. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 26 points right now. S&P is down 3. NASDAQ Composite down about 7 points. Let's go check in on the ETF structures. Let's go take a look at the index ETFs here, see what we can see. So what the S&P, what the SPY has been doing, it's been dealing with the swing point that was established on January 15th. Now, that swing point, I've got a black line, horizontal line going across my screen, both at the top on price as well as at the bottom from a volume standpoint. And what it allows us to do is allows us to take a look at what's been going on as that area continues to be tested, including today, quite frankly. So the first time up here was on February 19th. Price gets to 184.95, 1 penny above the swing point from January 15th. You see that fairly often. Price gets up there, reverses, creates a key reversal session. So that's what we saw here on this trading session here, because price was to a certain extent extended because it was all the way back at its swing point. We saw an intra-session move both above and below the prior candle, and we saw a lower close out there. So that qualifies as a key reversal session out there. And that says that the high of that session should also be resistance. That high, 184.95. Now, 126 million shares on that trading session. So you're going to benchmark that session, 126, versus yesterday, 114 million shares. And so you had a failure both on the price and volume. Of course, that 114 million shares also going against 98 million shares from January 15th. So now, and you're still trading inside that swing point. See, that's the key. You're still trading inside that swing point as we speak right now. So you moved higher You're doing it with a little bit lighter volume, but to me, because you came into that swing point, meaning the January 15th yesterday with higher volume, because it was 98 million there versus 114 from yesterday, says, okay, the highs should be tested. The highs of yesterday should be tested. What are we doing today here? We haven't really done a whole lot. The low of yesterday, I guess let's look at the low, 184.20. The low so far today, 184.23. So we're just having an inside day inside of the SPY out here. No breakdown. However, the area of resistance, that 184.95, that's really the number to be focused on, in my opinion. Yesterday's close was 184.91 because that's now it's both the new swing point, albeit by 1 point, but also more so because it is a bearish candle. An old resistance should become new support if you can see it close above that. Right now it's resistance. Clearly it is resistance. But today with an inside day, not providing you with a whole lot of information out there. That's what's going on inside of the SPY. Let's go take a look at the diamonds. What are the diamonds doing? For all intents and purposes, if you've been listening to the show for a while, you know I had identified this candle here as really being the key candle, and that is for February 14th. We saw price here moving with inside that the body of the candle. The body of the candle truly is the essence of price. The close of that session on February 14th, 161.59. We closed just slightly above it. Closed at 161.66. You know, I'm not a believer in just closing 1 penny above it, meaning, that becomes the rising three. You see, the rising three is a continuation pattern out here. The conservative trader would take a look at a close above the actual candle session high. A more aggressive pattern trader would be taking a look at the body. So the aggressive trader would have said, hey, long and strong from that candle out here. I kind of say, hey, not so fast when you've only done it by a few pennies out here. That trading session, and also what's going on the left-hand side of the chart. Well, we got these downdrafts that began taking place January 24th, 14 million shares of downside, gapping down with 9 million shares out there. So let's take the easy one, the 9 million shares, and yesterday you were up with 6.7 million shares. So moving into an area where it has broken down, you still have this open gap up here. It did not close, and the gap I'm referring to is between January 22nd. The low is 162.99 out there. And the other is the high of January 23rd. So you got an open gap out here. From a retracement standpoint, you can see it's near the 0.786 retracement. I don't have the 0.382 and 618 on my screen here, just simply to keep it a little bit cleaner for you. But if you go from the swing point of December 31st in the diamonds, 165.51, down to the swing point low on February 5th out at 153.12 out there, you'll see that the 0.786 retracement is 162.86. Nonetheless, out here, we have not seen a reversal signal inside of the actual diamonds. Really, to a certain extent, this does, this is not your textbook key reversal session right here on the trading session of February 19th, not like it is inside of the SPY out here. So yesterday's candle, not a reversal, just moving in with lighter volume. But no bearish reversal inside of the Dow diamonds out here. Today's candle, just simply a move sideways. If we take a look at the Qs out here, let's look at the Qs, the real strength in the marketplace. What we know about the Qs is they have thus far made a expansion of their last set of swing points, that being January 22nd's high at $89 even, Steven, down to the low that came in on February 5th at $84.64. The 1.272 expansion right around the $90.42 mark out there. We hit that here on the trading session of February 18th. That becomes your swing point high. Now, that swing point had 29 million shares. You hit that level with 31 million shares on the 21st, so you came into it with volume. Rejected it on price, but not on volume. You came into it yesterday with 31 million shares. Again, you rejected it on price just slightly because it was 90.42 was the benchmark. You closed yesterday at 90.41 out there. 31 million shares again going into 29. Says that yesterday's high should be tested. We really haven't had a failure from a volume standpoint because you're moving into a swing point. Now, if you see it close above 90.82, today you're trading at 90.37. That sets up a move to the next expansion point. That would be in the 92.25 level. Now, the numbers I'm giving you, to the exact penny, don't ever trade anything to the exact penny because these are guidelines. These are not now, they often do hit exact, but really it's a guideline that you are using here from a measurement tool, and that's how you utilize swing points and expansions and or contractions as well in trading the markets out here. Leaves us with the IWM, with the Russell 2000. Russell 2000, really another key for us to be paying attention to. Why? Well, Russell 2000 actually at its highs here, and we're looking at the IWM, that's what we're using. That actually is the one that's got the most bearish reversal pattern out here. That's called your 3 drive to a top pattern. Nice 1.618 expansion, and it actually worked. And if the market is going to move lower, you're going to need to see this pattern here still hold until some other new pattern, were to show up. But thus far, we can only trade what it is that we see on the charts. And what is it that we see inside the IWM? Number one, it was a weak link out here, and it has exploded all the way back up to its swing point from January 22nd. Now, that had 24 million shares, and you came into it yesterday with 43 million shares. Tell me something. Are you coming? That was a weak link out here, right? The IWM. Are you coming in with volume? Yeah, of course you're coming in with volume. And it did not test the highs. 117.31 was yesterday's high. 117.37. Hold on a minute here. Yeah, 117.37. What did you get to yesterday? 117. Okay. So 117.37 is the number. You get to 117.31 yesterday. You're coming in with volume out here. The last time this showed you any kind of potential reversal pattern, I have to stretch the limits here, and we'll call this a doji candle from February 21st out there. So you're above any kind of resistance other than now the 3 drive to a top pattern. The swing point here from January 22nd. Today, so far, you've done 9 million shares in an hour and, 12 minutes of trading. So you have done 9 million coming into 24 million in an hour of trading. Guess what? The small caps are saying they're going to go test the highs at least 117.37. At least that is to me the read on what the ETF structures are communicating to us, both from a candle perspective as well as from a volume perspective from yesterday. Now, let's go take a look at some of the sectors inside the S&P 500. Let's see what comes up first here on my screen. Energy sector. Let's go take a look at the energy sector and see what he is doing out here. So the energy sector, from a bullish standpoint, guess what? Back inside the house of the rising price channel. And that house of the rising price channel, that began back in June 26th out here of 2012. That's the blue diagonal line going across my screen. So the XLE forms a 1 to 1.618, A to B equals CD. Nice little bull sash candle as it reverses out of there on February the 6th. Now it's back inside the rising price channel. That actually says that the XLE, that could have been a false break to the downside. Now, let's go see what it's doing at swing points. The swing point that we're using here inside of the energy sector, December 31st, 8 million shares inside that swing point. The energy sector yesterday moving in with 18 million shares, moving up. Moving on up, folks. So it did not test the swing point. Maybe it did. Let's see. 88.54 is December 31st. No, you get to, 88.48. Stops just below that level. So, today's action, what is it that we could see? We could see here that the energy sector was really testing maybe the lows of that rising price channel out here, but no question that the energy sector here is moving into a swing point with volume out here, and you're back inside the rising price channel. We won't really know anything until we see what happens at this swing point high, which is 88.54 out there. And inside day, obviously, just like the much of the market out here, inside of the energy sector, that is the XLE. Let's look at the financial sector out here. Go see what it is doing. Actually, the stronger ETF inside the S&P 500, inside the sectors of the S&P 500. The energy sector, which was the weakest, is actually now, certainly stronger than the financial sector. I say that. Well, hold on a minute here. Let's put this in perspective. Wait a minute, Steve-O. Go back to December 31st. Let's do that. Let's use the similar swing points. Yeah. It is as strong, certainly, as the XLF. The swing point for December 31st, back here, the low is 21.78. You sort of traded up into that level here yesterday. Now, what is the financial sector doing? The key here to be watching, long or short, is in my opinion, is February 19th. Why? You do have a key reversal session there, and that says that should be resistance. That held as resistance yesterday. That number 2174, 64 million shares. Yesterday you came into with 42 million shares, a little bit light out there. Yeah, you've got these downdrafts out here from January 23rd as well. 52 million shares out there, but that's right now. So you got a couple areas here of resistance inside of the financials. So far this morning here, the financials, though, have rejected lower price, and that is the 21.48 level out there from yesterday. Volume today, 12 million shares, so pretty decent volume out here. Can't really say that it is pushing lower here, but really more of a sideways day. That's on the financial. Let's go take a look at technology, the XLK. Now that's, pretty much similar to looking at the Qs, so different weighting structure. Excuse me a moment while I just take a little sip of water, little refreshments, little bebidas, little beverages here. If we take a look at the XLK, what is it doing here? That swing point is January, 15th, in essence, is it's not the most recent swing point, but it's the one that we're dealing with. And from a volume standpoint, January 15th, 9.7 million shares. What do you do here? You push up with 12 million on February the 14th out there. You close above that level. In essence, that really becomes your next swing point. You make a move a little bit higher, a little spinning top. February 18th, that now becomes the swing point high at 36.18 out here. Bearish engulfing candle. And a test of that area was 6 million shares, was testing the swing point of 8 million shares. You had a failure on price and volume inside the XLK on February 21st. Bearish engulfing candle, that says resistance now has moved to 36.26 inside of that session. Yesterday's test, though, was with 7.8 million shares. So guess what? The XLK was pushing into a swing point, got above it, was doing it with volume. That actually says the XLK wants to get back up now and test probably yesterday's high, 36.27 out here. Really a bit of an, if you can say if it's done anything here so far this morning, it's just really rejected lower price out there. That's on the XLK. Let's look at the healthcare sector, the XLV out here. And you know what I want to do is I want to go back and take a look at the XLE. Let's go take a look at ExxonMobil, Chevron, and Schlumberger. The XLV here looks pretty healthy. So the healthcare sector looks pretty healthy to me. This thing here, let's take a look at expansions. Geez, it's already above the it's trading at the 1.618 expansion of its last set of swing points. Those swing points being the high here from January 22nd, that number was 57. 54.65 is your low swing point. That was from February 5th. If you take the high to the low, subtract the difference, multiply the difference times 1.618, add it to the bottom, it'll take you to 59.26. You're trading at 59.23 right now, but no, the support here inside of the XLV is really the high of this session here, February 19th. 58.94 out there. So as long as the XLV can stay above that, that becomes your new potential support area. I said 58.94. So far this morning we saw 58.93. So there's a test of support. 58.92 yesterday, a second test of support, and you failed as you tested that back here on February 21st, but that was 5 million shares going into 10 million shares, not enough to bust them down. So the XLV, let's take a look at A to B equal, new A to B equal CD pattern out here and see where it is at in making or completing that pattern here. So it's completed the 1-to-1. It's above that. XLV looks to me like, not just $59.85. Actually looks more like maybe about $61.27 out there. So the XLV truly the leader with regard to the S&P 500 sectors at the moment. Now, I did mention let's go look at Chevron and ExxonMobil. XOM is the ticker symbol out here. We come back from break, I promise you. I do promise you. We'll go take a look at ExxonMobil. 877-927-6648. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Flat market out here. Dow off a point. S&P down 20 cents. Real quickly here, ExxonMobil, I did say I would go take a look at it. Yesterday, moving into an area of where it had its last downdraft session, January 23rd. So moving into resistance here right now. 97.39 is the number. That's January 23rd. There were 15 million shares on that downdraft session, but bullish here, 16 million shares yesterday to the upside. So that's the way you like to be able to take on a fight here of the bears, and that is on ExxonMobil. Had a request to take a look at the euro Japanese yen, so we'll do that here momentarily before we go to Ernie in Michigan. We're going to take a look at the 120-minute chart here for the euro Japanese yen. Let's look at 3 time frames. The euro Japanese yen. There's a 120-minute time frame. Forming that would form a Gartley buy pattern, a little wide-ranging bar here this morning. You could see the euro-Japanese yen move down about 139.93 or so, where it would form a real nice Gartley buy pattern out there. If you saw a nice bullish candle, that would be strong. It's moving into until the euro-Japanese yen takes out the lows here from 5 a.m. at 139.18. I have to remain bullish on the euro-Japanese yen. Why? Take a look at the daily chart here. Daily chart shows more of a Gartley sell pattern with the euro-Japanese yen moving up to 142.93. That will put fuel in the markets if, in fact, these patterns here play out. And then one other pattern that we would look at, and that would be the weekly. And this bodes well longer term for the markets out here right now, and that is this red line. So I don't have a problem telling you where the red line is. And that red line is really from the swing points. I'm using the June of 2009 area, right around 138 even, Steven. You're at 140 right now. We saw price break above that area, come back and test that, and then and hold that. And as long as price stays above that area, says on a weekly chart time frame, the Euro-Japanese yen wants to move to the upside, and that is the better longer-term picture for the market. Speaking of the markets, let's go to Dearborn, Michigan, to our man Ernie. Ernie, thanks for calling. Thanks for holding. How are you today?
From home before it here. Hey, just a real quick general question. I mean, it's been puzzling me for a while, and maybe a lot of the listeners. You know, years ago, and I've been watching the markets for 50-some years, a stock would get up to 50, 80, 100. It would split almost automatically. Now you have stocks 100, 500, 800, 1,500. Do you see any reason for this or meaningfulness?
There is. I don't really know how to answer that question for you with any factual information. And so you're calling in and asking, factually what's going on, and
let me give you my possibility.
Perfect.
Okay.
Perfect.
As the prices go higher and higher and higher, the average guy is not going to buy a $1,800 stock or a $900 stock or whatever.
Well, but in essence, he is, because so much of what's really being managed out there are 401k retirement funds. But the average individual on an individual basis, yes. But go ahead.
Well, that's exactly the point that I was getting at. You get all the big money funds are the only ones that can buy this, and if they keep going with the one-way direction, I mean, they've got the ball game all to themselves.
Yes. So in one sense, you're buying stocks like Apple, Google, Priceline, Tesla by buying the Qs. By buying an ETF structure. So 50 years ago, all we really had, were the beginning of mutual funds. And now you've got so many ETFs out there, and then you've got end of day as well, reconciliation that has to be done. So, maybe you've answered your own question.
Maybe I did. I don't know. God only knows. That's why I call.
All righty. Hey, thanks so much for calling, Ernie. Sorry the show is over here today, but it's good to hear your voice. And thanks so much for being a supporter here at TFNN. That was Ernie in one of my favorite cities, Dearborn, Michigan. Stay tuned, folks. Our man Basil Chapman is up next. It's Tuesday. That means we've got the Options Hour. We've got Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.